Well, equity markets seem to have given a bit of a thumbs up to the budget. Irrespective of what levels we close today, I think there are some key takeaways which most people are talking about from an equity market perspective. Adherence to the fiscal glide path, a higher capex plan, and not very aggressive assumptions on the revenues on the tax side as well. With me to talk about their view on what the budget threw up and what is the outlook ahead for the market, two experts who need no introduction, Nilesh Shah and Shankar Sharma. Gentlemen, both of you, thanks so much for joining in. Nilesh with us right here in the setup as well. Nilesh, can I start with you? Your key takeaway, what is it that impressed you the most? Is there something that disappointed you?
Well, the most impressive thing is that this is a budget which has ended up being responsible. It's taken risks in the sense that despite challenging economic environment, it's gone ahead and cut taxes for all sections of the society. It's lowered the topmost of the tax kind of rate. And it ensures that it's also bringing down it at least targets a lower fiscal deficit. So that's, I think, a great starting point. It sets the canvas. I think in terms of the long term, the fact that there's so much of focus on making a modern India, a more knowledge economy driven India, the fact that it mandates that we're going to now have libraries in villages, physical and digital libraries. There are going to be centers of excellence for artificial intelligence. There was so much of talk about doing a lot on 5G. All of this, I think, is fantastic. There's also so much of focus on infrastructure, increased outlays for infrastructure, having infrastructure funds as being part of priority sector, qualifying as priority sector, increase in outlays for housing, the Pradhan Mantri Awas Yojana, the outlays on that have increased. The overall capex outlay is increasing by 33%. So on the whole, if I look at it, lower fiscal deficit, stable growth, and so much in it for consumer, capex, and a drive towards a knowledge economy, I think it's a stable, bold, and a wholesome budget.
Interesting. Shankar, do you mirror this view, or is your view slightly different? Is there a devil in the detail, or are you by and large happy with what you've heard the finance minister dish out?
So I haven't read the detail at all. So, we will get to that, and we'll wait for people who do this for a living. For us, the living is right here on the screen. And so far, it's been okay. I mean, we can't complain. I was, like everybody else, we were apprehensive about this favorite term of policymakers in India called tinkering. Once something is introduced, a tax regime, it's permanently tinkered with. Nothing is ever stable or predictable. I think it's just for the need for doing something permanently. So LTCG was introduced in 2018. And then there was now talk of it becoming equalized with other asset classes and all that, which would have been a completely senseless move. But thankfully, the finance minister refrained from making such a move. I think in some part it would have been also driven by the recent market volatility. Because the last thing the FM would have wanted would be to really damage an already fragile environment, as we have seen in the run-up to the budget. So that was a huge relief. And other than that, there's nothing to complain about on the budget. Every single box was ticked, and in particular, the salaried middle class or the middle class itself, which had been hurting because of inflation, gets a much needed relief. Capex looks strong. Whatever else I saw, there was really nothing that I can remember was a problematic area. Every single area looked positive, promising. It was thankfully a very short budget speech. That was a final icing on the cake.
Yeah, we take all positives as we can. Shankar, just quick follow up there on the capex. Now, it's been the third straight year, but a fairly large assumption on capex. Is that something that pleases the street for the slightly medium term as well? Because we're trying to build up this whole manufacturing ecosystem in the country, so to say.
No, we need capex. You were asking me before the show that whether I was in a hotel room, and the answer is yes. And the reason why I'm in a hotel room and not in my office in South Bombay is that it would have taken me longer to go from the airport to my office in Nariman Point than it took me to arrive from Dubai into Mumbai. So, we definitely need capex. We need loads of it, and I'm really delighted that the government continues to provide for that in every single budget, at least in the last 3 or 4 years.
Interesting. Nilesh, so this 33%, right? There's a whole talk about how the last 2 decades has been a consumer-facing schemes which have done well. Can this be the manufacturing decade of sorts? So far, walking the talk, does this in any fashion make you believe that the portfolio allocation should be altered, or is there more to now this than the budget? Because the budget is, as it should be, a statement of accounts. Let's look beyond the budget, look at FOMC, and look at what else happens during the course of the year.
See, look, Neeraj, I think before the budget, there were apprehensions that they be tinkering and all of that. And the fact that next year we have elections, that would the government basically get attracted towards populism and indulge in populism. I think what really the budget has done is to address any kind of concerns or put to rest any of those concerns or apprehensions and signaled, a lot of continuity and stability. I think finally long-term investors in the country, whether they're investing in the markets or whether they're investing in businesses, finally want continuity and stability. And what this budget has done is essentially kind of continue to be on that path. So I think that's the good part of it. In terms of investing, I still think that India remains a bottom-up market. I still think there are several businesses here which make sense from a long-term perspective. And I think if India is a stable growth destination, I think a lot of businesses will flourish. And I think as investors, what we want to do essentially is to kind of really identify those pockets of opportunities where we can bet on emerging businesses and ride the growth wave over the next 5 to 10 years. I think the budget is clearly a stepping stone in that direction. Yes, I think the budget will keep getting discussed for maybe a day or a week or a month. But after that, it's back to companies, back to earnings, back to cash flows, and back to seeking value.
Yeah, most important. Nilesh, you mentioned a few outlier things which were done, which impressed you. There was some focus on Gift City and trying to simplify those rules as well. So government is the budget tried to tackle some of the leading issues. There was some mention of, the bond markets were slightly disappointed during the budget speech. I think they've cooled off now the yields as well. But my question is, from an equity markets perspective, you got most things. From a bond market watchers perspective or a numbers perspective, is there something amiss, or does the math completely tally for you?
No, I think it tallies, because I think for the bond market, probably they were looking at a number below 6. Now, whether you were 5.8, 5.7, 5.9 is obviously, you can keep debating on that endlessly, but I think 5.9% is a good start. Okay. Now, the bond markets can keep having the apprehensions around inflation and things of that kind. But net, I think it's a good number to start with. I think having a number below 6, 5.9%, and then guiding towards 4.5% in 2025-26, I think is a fantastic journey. I think there's a clear roadmap. And I think the finance minister is doing a commendable job by sticking to that kind of roadmap. I remember last year also, same time, bond markets did have concerns. But look at it finally, what a year it has been in terms of the government's finances. Of course, nominal growth rate and all that has helped. Inflation has helped, which is buoyed revenues. But the bottom line is revenues have come. Revenues are ahead of estimates. Tax collections are ahead of estimates. And I think that journey will continue. So maybe I think bond markets, at least for me at this stage, their concerns probably, I think, should be affirmed. I think they're transient. And I think over a period of time, I see no reason why the finance minister's estimates and projections will not be there.
Okay. Well, and by the way, the assumptions on tax revenues are also not that, hyperbolistic, if you will. Pretty steady.
Yeah, absolutely. I think as long as we have basically a 6% growth rate and maybe 6% of inflation, I think we should be there.
Okay, great. Final question on this conversation, question to you, Shankar. I know you mentioned that you're waiting for the details, so let's cut that out. In a Hindi interview that we did about a month and a half ago, you had spoken about how, from the slightly medium-term perspective, this seems to be the place to bet on. A lot of people are saying that there is focus on increasing the income of the consumer as well, with something that which you alluded to too. So from your perspective, from Shankar Sharma's perspective, here on, constructive is because of the budget or in spite of the budget, what have you, constructive on equities, neutral on equities, or slightly skittish on equities because of global and local macro?
No, I agree with Nilesh that India is a really, bottom of the market, and while macros do play a role, if we pick carefully and all you need is, 5 out of your 25-30 stocks to fire, I think you are well and truly on your way to buying your yacht. So I think, macro is problematic in India, it's problematic globally. In India, we have a significant problem on the current account. We have a problem with the fiscal deficit too. I was just trying to remember that how effortlessly we have gone past the days of 3% and 3.5%. And now we talk positively when the number comes in at 5.9, or it is not coming, it is at this forecast. Somehow the whole frame has shifted markedly higher, and the glide path promises to bring it to 4.5 in 2025-26. 2026, which itself is very high. So, and the level of borrowing that we're looking at in the market, maybe, I don't know, 15 lakh crores or thereabouts. That is still a huge number. So it's not that we don't have challenges. We have a CAD problem because exports are going to be problematic. We have a balance of payments problem because we have a negative BOP last year. We are going to end up negative looking at the pace of FII outflows. So the macros are challenging to be clear globally. I mean, that is a problem. Let's accept it. But within that, I would rather be buying small caps, bottom-up themes in India than anywhere else in the market. So even in this challenging environment, I think India still offers a fantastic bottom-up place. And nothing has changed for better or for worse by looking at the budget. I remain very optimistic on small cap investing in India.
Nothing has changed for the worse. I think that is also a big thing because so many people were anticipating that there could be issues. Appreciate both of you gentlemen joining us. Shankar Sharma, Nilesh Shah, thank you for taking the time out and speaking to us today.
Thank you.
Thank you.